everybody. How we doing? Morning, Danny. Morning, Paul. Morning, Neo. How is everybody this morning? Happy Monday. It's nearly Christmas. Heard on the news this morning. 37 days till Christmas. 37 days. Good. Not bar humbug at all, but anyway. Right. So we're going to have a look at the news today. Analysis of what's coming up this week. Trading the DAX and the FTSE. See where everything is. Do a full analysis of all the FX pairs. We've got an ADR already this morning. 2 ADRs actually. Aussie, New Zealand already hit ADR, although that's not really an ADR. Look at the size of that overnight spread. So it's up, but it's not really. I wouldn't class that as a gap fill, as a ADR. Same with that one, really. New Zealand is very much prone to this. Huge swaps at the open on Mondays. So they're not really ADRs. It's not really any RSIs either. US dollar CAD is the only RSI. Still up there. Still holding. Still not coming down. This thing just is not stopping. Unbelievable. But we'll have a look at all that in a minute. So just quickly looking at the open. No trade on the FTSE this morning. Where's my pen gone? There's no. The pre-market range was 90. That is the minimum, which is 10% of ADR. So it's spot on. So EA didn't take a trade this morning. If you did take it, you probably got about 1 R out of it. 1.5 R, maybe, depending where you got in. So what's that, 12? Yeah, it's about 1 R. It's gone up. DAX triggered short at the open. A bit of a whipsaw at the open, but triggered short. See where that one goes. But we'll come back to that in a minute. Morning, Sarah. Morning, FTNet. Morning, CK. Morning, Virginia. Morning, Travel. Just a quick update. There's a few members in this morning. So just a quick update. I posted in the group, in the members group in Discord, but quick update on the strategies that we're testing at the moment with the kind of lazy trade at EA. This thing's killing it, look. Absolutely killing it. It's just TP after TP after TP after TP. Nothing but TPs. And the one that it's got not a TP on, it's recovered within 2 trades. The only trade that at the moment isn't working on that strategy is this pound US dollar, because obviously what's going on with the US at the moment. But where's that? Over here. Oops. But yes, so yeah, this strategy is absolutely killing it at the minute. Why can't I get that window small enough? There we go. So yeah, so this is the only trade at the moment that's struggling, but it only really needs an ADR, maybe an ADR and a half. But it's going to start doing automatic drawdown control on this, so that will get closed out, that trade. If this pushes down again today, there's a limit of 6 trades on it, so that trade will get closed out in a loss, which is fine. And then the average will jump down to here, so it'll need a quick out. So yeah, we'll see how it goes. But so far, this strategy is conforming to exactly what we did in all the back testing in the member streams. So it's looking promising. But yeah, very good. And the pullback strategy as well. Nothing banked yet, but it's sitting in 1.3% profit. This is a swing trading strategy. So this is a multi-day hold strategy. So it's going to take lots of little losses when they don't work out. And the ones that do, nice big winners, as you can see. So hopefully this will be pay week, because what you find with this type of strategy is you get nothing much happening because it doesn't move, and then all of a sudden you get a week where it takes off and you suddenly bank loads and loads and loads. So hopefully that's this week. So yeah, so 1.7% down, 1.3%. So it's pretty much break even. It's only been running a week. So, but yeah, good. They're working as per back tests, which is always good. That's what back testing is all about. Right. Triggered long on the FTSE on the 5-minute ORB. It's quite a big opening range today, so it might be a bit of a slow burner, but we'll see. So long FTSE, short DAX. So if they both break together the same way today, one will hedge, one will make money, one will pay for the other, which is what we want. Right, overnight news, over weekend news. Obviously, it's kicked off a little bit more in the Middle East. So I wouldn't be surprised to see some safe haven runs potentially starting this week. but we'll wait and see what happens. But we've had some more Middle East tensions. Obviously, there's been more kicking off in Ukraine as well. So it's quite a possibility that we're going to get some escalation starting, unfortunately, by the looks of things. Biden has basically allowed Ukraine to use long-range missiles into Russia now. That's going to annoy Russia. Russia is going to now go, right, the West is involved in the war and it's all going to kick off, potentially. So we need to be keeping an eye on the Swiss and the yen. Oh, there's some red news there. Yeah, North Korea may end up sending 100,000 troops to support Russia. So basically it's a war between Russia and North Korea and everyone else. So it's all starting to get a little bit more tetchy over there. Loads more strikes by Israel over the weekend. They've killed a major leader. So yeah, it's all. So watch those Swiss francs. In these, when you get this sort of escalation, you just want to be ideally short everything against the yen, short everything against the Swiss franc, because if the safe haven run happens, you're going to see that sort of movement continuing over days. So just bear that in mind if you've got anything long against the Swissy specifically, because the Swiss tends to be the main beneficiary of those. We've had this morning on the news, Ueda speaking, a lot said. So this is where it kind of started around about 1 o'clock this morning. And as you can see, the whole morning, it's nothing but Bank of Japan governors speaking, still going. And it's finished about 7 o'clock this morning. So massive talk from Japan. Nothing in red really here at all. So it's difficult to distinguish as to what has been said overnight, really. The main thing I got out of it by scanning through all this morning was that they are planning to increase interest rates quite aggressively as long as everything keeps going as it is. So Japan is going to become a high interest rate country potentially, meaning that the carry trade long is just going to vanish. It's not going to be what we've been doing for the last 20 years. So just again, talking about what we've been covering in the members area, somebody's been posting some videos from a guy that's been, I haven't actually watched the video, so I don't know what it's about yet, but it seems to be trading all the yen pairs. Yeah. Any back testing you've been doing on anything to do with the Japanese yen over the last 20 years is not going to work moving forward. So just bear that in mind, potentially. The Japanese yen has had negative interest rates for nearly 2 decades. They're not now. It's changed. They've completely changed their monetary policy, monetary structure, the way they do everything. So everybody that's been doing all the back testing, I think it's only Altro has been doing back testing, and the strategy seems to work on the Aussie yen, the pound US dollar, the pound yen, US yen, and the euro yen. It only works on those yens because the yen has been doing what the yen's been doing for the last couple of years because of what the yen has been structured financially. It's different now. Interest rates are going up. It's not going to have that carry trade scenario anymore. Potentially, we don't know. But so yeah, so just bear that in mind when you're looking at these sorts of strategies where someone's gone, I found the holy grail for the yen. Yeah, you did, but it's not. That's the old yen. This is the new yen. Yeah, same as way as all the strategies everyone was trading pre-COVID. Post-COVID, they don't work because post-COVID is a completely different market structure. It's different. Everything's been different since post-COVID. What's going to happen next? No idea. Yeah, backtesting is only as good as the data you test it over. If you test it over a period pre-COVID and post-COVID, and it still comes out profitable, you've got something robust. If you test something on something like the yen that has always moved in the same way for the last couple of decades, that ain't going to work. Yeah, potentially because the yen's going to be different moving forward. So a lot of this stuff has been very much interest rate oriented, and obviously now they're starting to change that. So also Ueda was asked about the latest moves in FX or against the yen. Obviously we had the intervention. Interventions have failed for the Japanese most of the time. This is the biggest intervention we've had. Look at the pullback here. But this part of this, a good month of this pullback is caused by Trump potentially getting into the White House, or getting into the White House now, but the potential of him getting in there. So what that's going to do now, nobody knows, do they? So it'd be interesting to see what happens. But basically, Wade has been asked about what's going on. No comment on short-term FX movement. So the market wants to know what he thinks of now being back and your intervention move being a complete waste of time. They're not interested in telling us. But they have not mentioned anything about further intervention. So Friday, we had a lovely big rundown. I decided to take a New Zealand dollar yen long on Friday. Sorry, Friday we had a big rundown. We're back to break even on it. So I'm out. I'm just going to close that. I fancied a go at a long, basically, but the only reason being is because the swaps are good, and we had this big, strong push, yeah. And I was looking for a pullback. I didn't get TP. My TP was here. Price got to there, and now we're back at my entry. Yes, it could well do that, but there's been a lot of talk about on the yen this morning, so I'm just going to flatten it. I don't really like trading the yen specifically at the moment. In fact, I just need to quickly turn off the yen because I've got it running on here. Just shut that, close that. So yeah, so I just don't want to get into any new auto trades on the yen, basically. So that's your overnight news. This week is PMI week. So this week basically is all back end weighted for movement. We've obviously had that this morning. The G20 meetings start today without the US leaders. So what's going to come out of that, we don't know. But obviously one of the big focal points is going to be China and what's going on there. It's going to be what the potential trade restrictions coming in are going to be. But it's all going to be speculation because nobody knows anything, and the person that's going to be doing all this stuff isn't bothering to turn up. So the G20 meeting this time round is going to be pretty useless. However, something might come out of it. So you just need to be aware. G20 goes on and someone might say something in there, one of the leaders, which causes something to spike. So just be aware there's some volatility over the next 2 days. We've got Lagarde speaking later. Monetary policy report hearings coming out tomorrow for the pound. Could be something interesting in there. We're still unsure as to whether Bailey is going to do that or that on the next meeting. So we might have something that gives us clues in there. So there's potential volatility ahead tomorrow morning for the pound. We've got CPI for the Canadian dollar. That's all coming out as forecast or just under. So they are expecting CPI to kind of be stable, stroke a short-term bounce. Obviously, if that short-term bounce doesn't happen and we get a 0 or anything negative, I'd be surprised if we do. But if we did, you're going to see a goodbye Canadian dollar for a bit. They are forecasting the median to be a little bit down, but overall we should be looking at a bounce play on the CPI. So, excuse me, itchy nose. So I don't think there's a lot of potential for movement on that, but there may be. That's the one that really is going to upset the CAD potentially tomorrow. So we got that coming out tomorrow. We got CPI for the pound on Wednesday. Again, we're expecting a 0.5 bounce. That's a big bounce, but it's what we were forecasting. We were forecasting it to go back above the 2%. It looks like that's what they are expecting. If we don't get that, we are definitely going to get a drop in interest rates on the pound, and the pound is going to come down on Wednesday. So very key number that. If we get the forecast, difficult to tell what really will happen, but if we get lower than the forecast, if we come out at 2% or something, we're going to drop that pound. If that jumps any higher, I doubt we'll get a spike. It means we're going to freeze interest rates. We're not going to put them up again, but we may well freeze them. Yeah, so it's going to be that or that for the pound on Wednesday by the sounds of things at the moment, but we'll have to wait and see. We've got some more ECB stuff. We've got Oada speaking again on Thursday. Unlikely anything is going to be said in there that is not been said this morning. So unless, you know, the thing we don't know is what's going to happen to the yen over the next 2 to 3 days. If on Thursday morning we've had a massive rally against the yen, he may be asked about FX intervention and he might have a completely different view on Thursday. So we'll watch it on Thursday. Bullock is speaking Unemployment claims coming up as usual for the US dollar. And then Friday is PMI day. So this is the day that the vast majority of the volatility goes in across the board. So if we've had that sort of week, profit take potentially, or obviously could continue, but PMI is obviously coming out on the Friday, and it's basically euro, pound, CAD, retail, and US. So it's basically volatility across most of the majors. So busy day, and obviously that'll be news driven. But the PMI is the Purchasing Managers Index. Purchasing Managers Index gives you a clue as to what's happening to the Consumer Price Index. Consumer Price Index drives interest rates. Interest rates drive currency direction. So this is the kind of the low point, which starts to drive everything else. So very important day on Friday. But that's where all the volatility is likely to be put in. But if everything comes out as forecast, get a lot of that. But they may use this obviously just to unwind moves they've put in. Morning, Barrier Man. How we doing? Let's quickly look at FX. The indices. God, another one of these days. So no volume at all this morning. Really tight high on the DAX here, which seems to be holding at the moment. But it's looking bullish. Very, very range bound at the moment on the DAX. Very range bound. It's a big, wide range, but we are not going anywhere. We're not trending at the minute, so could go either way. That at the moment, FTSE's been stuck for 4 days now. Bullish, so happy to be long on that, but wouldn't expect a massive move out of it really. TP1 basically 3R, because it's a big range, it's just under 20% the break today on the opening range. Be looking for a 3R on it. I don't think we'll get much more than that today if we can get there, but very, very low volume to date. Not moving. Not a lot you can do with that. Just have to give it some time, wait and see where it goes. Right, so ADRs today, the only ADRs we've had are the Aussie New Zealand and the Euro New Zealand. Those are both really spreads. So this ADR hit up here really is caused by that massive spread down. That's not real price action. As you can see, it immediately returned to it within a quarter of an hour. So I wouldn't really class that as an ADR. Obviously, it's pushing up, but it's not really hit its range yet. And the Aussie New Zealand, which is the same thing, massive spread at the overnight. So all the way down to there. So huge spread overnight. Looking in the region of nearly half an ADR. So I wouldn't pay too much attention to that. It is pushing up though, so potential of a short. So those are your ADRs. Obviously, weekly ranges, we've got nothing hit. We are kind of mid-month now on the 18th. There's a few monthlies which are really extended. The Euro CAD being one of them. Very extended on the monthly. That started to bounce back last week. So month start is pretty much the beginning of this chart. So that is 150% of your monthly range extended there. And it is starting now to bounce back. Obviously, we've got loads of news coming in this week, which could move the market. But yeah, we got that one. We've got Euro Pound. We've got Euro US Dollar also extended at 125. So Euro Pound, again, that bounce started at the beginning of last week. And Euro US, wasn't it? That's the other one. And that is still obviously stuck. US dollar still screaming. So so those are your ADRs, AWRs, AMRs. RSI extension, the only thing we've got extended is a 4-hour Canadian dollar still. But this thing is just parabolic now. So we are 1, 2, 3, 7 weeks in to the push from there. So, you know, it's a crazy move, this. Absolutely, you know, election. Nothing much you can do with it. But I did if you look at the size of the move here, you can take it from there or there. It's pretty much the same place, really, down to there. And then you take this move here. Yeah, we are getting to measured move territory now, where you know, this thing has really got to start pulling back, but you never know. So we'll see what happens. But big strong move at the moment there. I'm long only on it because of the cost. So but if you are still short and you didn't get out before the election, yeah, it's going to be painful, that. Morning, Mark. Amir, I saw your bootcamp a few days back. Do you not like trading gold? Nope. I don't make money on gold, so I don't trade it. You can trade it if you want to. You can trade anything. But my P&L shows me that gold doesn't make me money. So I've got a video on the website about it if you want to go and watch it. That one. It's an easy one to spot because it's got gold bars. I'll put it in the chat. Go and watch that. Right, so I'm going to do a full analysis of all the FX pairs this morning. Run through, just see where everything is. At the moment, I've got exposure on at the moment, but I can't bank anything. I'm struggling at the moment to bank. Nothing's getting far enough to warrant sticking it in the pot. So everything that I've been in for, you know, a week, really. As you can see by the P&L last week, nothing really banked last week. Just can't get anything moving. So yeah, just waiting basically for stuff to move. Everything's been, I've had like everything you see in my P&L here, like if it's not in profit, it has been in profit. This has been up to, you know, a decent amount of money, but not, you know, nothing's just getting anywhere. It seems to be kind of just about getting there and then stopping, then just kind of about getting to, you know, that sort of movement. So just sitting in stuff at the moment, waiting for it to sort of cook, if you like. But yeah, at the minute, just waiting for some decent movement to come through. So going to run through the pairs, have a look at everything, where everything is. I'm still trading H1 RSI extensions at the moment. So just waiting for the H1 RSI extensions and then position trading into those. I'm using the swap for a filter and basically not trading yens. So we'll go through all the yens. We'll start off with the yen because it's easy. But it's the same old thing I go through kind of every week with the yen. We had the intervention. Since the intervention, we pulled back and the market doesn't know what to do. So as I said at the beginning of the stream, yeah, that, you know, any strategies you test on the Japanese yen prior to their interest rate change, which was whenever they changed interest rates, I can't remember when it was, but it was a few months ago now, wasn't it? We finally changed interest rates on the yen for the first time in a couple of decades. Anything you've done prior to this isn't valid anymore because the yen now is using interest rates to control its currency value. So, you know, it's different. It's more like a normal currency now. The market has exactly the same sort of view of me as me at the moment, it seems. Holy crap, that's the biggest thing we've ever seen on the Japanese yen in history. What do we do now? They don't know. So we're sitting around on the yen pairs doing virtually nothing. So, you know, it's one of those things that you know, so there's a saying in trading, I'm going to keep doing the same thing until I'm proven wrong. At the moment, all the yen pairs are range bound. So just keep selling the highs and buying the lows until it proves you wrong. When it proves you wrong, it's either going to go into a trend or it's going to be a failed breakout. You've no way of knowing what it's going to do, but that's really it at the moment. So, you know, selling up here, buying down there is the best thing to do. New Zealand dollar yen that's exactly what I did on Friday. I bought this low, but there's a lot of noise come out of Japan overnight, and I don't really want to chance trying to get into a position if the yen is going to power up. Also, the other thing is, if it is going to kick off now that Ukraine is allowed to use Western weapons to shoot into Russia, which has changed this weekend. If that escalates, this is a safe haven. This is going to rapidly power up. I don't want to be caught the wrong side of a safe haven run. So I'd rather just not be flat, not be in it. Flat is a position. Long, short, flat. There's only 3 ways you can trade. For me at the moment, flat is the best thing to do with the yen. So I'm only interested in longing it because of swap costs, but swap costs again are going to come down on this. Yeah, as they raise their interest rates, our swap costs are going to drop, which means that that carry trade doesn't exist. You can trade it in any direction, but right now it's still very expensive to trade short. So I'm really interested in long only on it. But yeah, so basically we're sitting around at the minute doing absolutely nothing, as you can see on the Aussie dollar yen. There is a long opportunity from Friday from the RSI extension to the downside. That was also an ADR hit on Friday. Yeah. And it has pulled back 50%. Unfortunately, I didn't get out on my one, but one or two things is at play here. It's a low bounce and we're going to see a market structure reversal, or it's the continuation of that accumulation break, and the market structure is now bearish. Yeah, and that could be the pullback. Don't know, but has a habit of sitting around doing absolutely nothing for days on end, the yen, as you can see. So we've had the move. If you didn't get that move and you weren't short on that move, you can go long on it, but likelihood is it's going to sit around for a few days and do nothing. So not really interested. CAD yen, very much the same. We are having a bit of news sit around, bit of news sit around. Yeah, that's basically what this is doing at the moment. So again, there's a lovely little long opportunity here, pushing up into the highs. It is ever so slightly bullish, but yeah, nice little long opportunity there. Market structure is very, very weak long. But now we've got a lower low put in. We are in a kind of expanding wedge, and expanding wedges are very hard to trade because it can go anywhere. So CAD yen, Swiss yen, that's the short that I took previously, so got out of that. But yeah, is potentially still a long, but being the Swiss yen, if there's a safe haven run, one of those is going to win, isn't it? It depends where they decide to put the money. My money is basically on the Swiss at the moment. I think the Swiss now will become a much stronger safe haven run currency than the yen, basically. So I think, yeah, probably more of that. But again, just not interested. But as you can see, it's kind of just flip-flopping around. The 4-hour chart is a lot easier to sort of see the move from the intervention. Yeah, so we've had this just what the hell do we do now scenario with it. And yeah, that's exactly where I am. I have no idea. So anything you do with the yen, bear in mind if you're position trading the yen, you could be holding it for days and weeks. So therefore, you really do not want to be going against that swap value because it's just going to eat up all your profits. If you're trading with stops and you're scalping sort of intra-range, yeah, highs and lows. So right now, after Friday's moved, it's an area you want to be looking for longs, but at some point this will probably break out. And the US dollar yen obviously is the one that is rallying, and this is the one that the Japanese are watching because all of their export goes to the US, and as this pushes, it becomes impossible to trade, which is why they do the intervention moves to basically get the yen stronger than the US. But it's failing again. Or is it? Is this Trump, or is this intervention failure? Don't know. There's just too many ifs and buts, in my opinion, to get involved in the yen in anything long term. Short term, do what you like with it. Doesn't matter intraday, does it? If it goes up, goes down, it's flipping a coin, isn't it? So it doesn't really matter intraday what you do with it. But from a long term perspective, very hard to call. All the Aussies, we're still stuck on interest rates with the Australian dollar. 4.35, we haven't changed. There's no plans to change. They haven't said they're going to change. CPI is really, really hard dropped at the moment. So we've had that big, strong move down on inflation, that will bounce. So they are basically neutral at the moment, the Aussies. So yeah, don't really care which way this is traded at the moment. As you can see, I've got longs on at the moment. First entry there, second entry there. It's in profit. I'm targeting up back into propulsion. So if it continues market structure south, that's kind of where I'm looking for them to add shorts. So ADR to the upside would be nice. So got longs on that one at the minute. It's just flip-flopping around really. So nice long opportunity on that one last week, as you can see, which I'm in. So looking for a pullback on that leg. And then obviously where it goes, wherever it goes. This is really only strong at the moment because of what's been going on in the US, and the US dragging the CAD along with it. So this current sort of 6-week drop that we've been seeing is only because of the 6 weeks worth of strength that we've had really in the US dollar. This isn't an indication that the CAD is particularly strong. It's just getting dragged along with Trump. So I don't care which way I trade that at the minute. Aussie dollar Swiss, all the Swiss franc pairs, might as well cover all the Swissies together in a group as well, because it's exactly the same situation with the Swiss franc. Swiss franc moves with the yen. The yen did an intervention. The Swiss moved with it. We pulled back. We're stuck sitting around doing nothing. Again, swaps long on the Swiss makes money, short on the Swiss costs money. So much rather be going long on the Swiss franc. However, with what's going on in the Middle East, it's more likely everything will come down against the Swiss franc if there's a safe haven run. So again, it's a very, very hard thing to trade at the moment because everybody wants to be going long on it, but you've got that thing in the back of your head saying one wrong Russian missile somewhere, UN's involved, huge collapse on everything against the Swiss franc, because everything will get liquidated and put into the Swiss franc for safe keeping. Basically, Swiss franc safe haven, not in NATO, doesn't get involved in conflict. Interest rates are completely under its control. It's loaded, low, and it's just the country you want to live in, basically. So you put your money there because it's safe. It's not going to get hurt. It's not going to be affected by worldwide events. So that's why the Swiss is a safe haven. So something kicks off in the Middle East or in Europe, that's what's going to happen. So, but doing that costs a lot of money because their interest rates are so low. You have to pay a swap on it. So very hard to trade as well, the Swiss. At the moment, I have got another strategy running on the yen and the Swiss, which we've been covering in the members streams, which we'll look at again tomorrow morning. Yeah, position trading wise, I'm not really doing a lot with the Swiss or the yen at all at the minute. This is a prime example that it's just stuck. So short the highs. There's a reversal alert just getting on the 4 hour last week. Hourly reversal was on Thursday and a retest. So nice retest there. So just sell the highs, buy the lows, basically the same as you would do with the yen. So good for stop loss based trading. Again, it's totally sideways, look, stuck. I've got a long on this one, Euro Swiss. Euro Swiss has got quite a small ADR, it's only 50. So I've got a long on this one. At the minute, target, I haven't really got a target on it, but yeah, I mean, 50% retracement I'd go for, assuming that we're going to stay where we are. So, yeah. But I'm not going to take much exposure on the Swiss franc. So again, sideways pound Swiss, New Zealand Swiss, very much the same. You know, a little bit more volatility on the New Zealand Swiss and the US Swiss. Obviously, that has been rallying because the US dollar, because of Trump. But the US Swiss moves differently to everything else because obviously it's a US dollar cross. So those are all your Swissies. Not a lot you can do with those. Aussie New Zealand is very stuck at the minute, sideways. So a lot of this at the minute, a lot of sideways movement. Any RSI extensions to the upside or downside are fine to take. Aussie's neutral, New Zealand a little bit weaker. So Aussie is the bigger economy of the two. So when we tend to get rallies based on interest rates, tends to be the one that wins. But at the minute, there's no real bias. So any extensions, really. You had a lovely long opportunity from back here somewhere. Where's that? as that spiked down, wasn't it? I was just trying to think, how did you get an RSI extension up there? It wasn't, it was here. So you had an RSI extension there. You had a short opportunity from there, but that was the election, wasn't it? So that was the last real trade long there. An hourly, obviously, it's very tight at the moment because it's range bound. It's hard to get any decent extensions on it. But you had an opportunity for longs there. You had a short there. You had a long there. There's a long there. So there's plenty of opportunities to get into it, and as it's range bound, but you're going to have to use 70-30 RSIs to get into this because it's not pushing hard at all. And obviously the danger with that is you're getting in early on potential squeezes possibly. But Aussie US, again, that's still coming down. I've got longs on this at the moment, only 2. Yeah, I'm just looking for them to unwind some of this US dollar move. At some point, they're going to unwind this US move. So I'm happy to be against the US, just waiting for it to happen. Yeah, it's going to happen. It's just a case of, we can't time the market. So we sat around for 3 days last week after the news, and we'd sat around for 2 days before that. So I got one on there because of a news event. Just waiting for the news this week. Unfortunately, the PMIs aren't until Friday. So what else we got US this week? Building permits. So unemployment claims Thursday. So the US dollar is all back weighted to Thursday this week, Thursday, Friday. So I'll be very surprised if we get much more than range bound activity this week, unfortunately. Morning, Roger. Waiting for a decent reversal alert to add to US shorts. Add into US shorts. Oh, yes, right. Yeah. Depends which currency you're looking at. Obviously, they're all different. So yeah, just waiting on that one really. Covered the Swiss euros. So Lagarde's obviously got everything nicely tied up. The euro's just perfect at the minute. So interest rates are at 3.4. They're coming down nice and orderly. There is potential for one more drop this year. So we could be looking at 3.15, 3.25, 35, 3.15 by end of year. So very nice interest rate they've got themselves. They're stable and flip-flopping around the 2%, very much the same as the pound is, although the pound's a bit more volatile. So yeah, they've just got everything sorted, basically. The only issue is unemployment in the Eurozone, but that will come down with interest rates being low. So everything's just sorted, Euro-wise. So at the minute, you kind of have to look at this as being pretty neutral, the Euro. So what you're going to find is the Australian dollar, in this case, if it has a rally, is going to push the Euro. If it has a dump, it's going to dump the Euro odd. It's not really going to be the Euro that drives any movement. It's going to be the cross. But a lot of the other crosses are also neutral at the moment, which is why we're seeing a lot of range-bound activity everywhere, yeah? Which unfortunately means, as you can see from that trade there, it takes a while for you to get out of your trades, because if you get into something and it pushes against you and you get in again and it sits around before it makes the next news move, it takes ages to get in and out of stuff. Hence my P&L at the moment looking like it does. Yeah, just flip-flopping around from P&L positive to P&L negative, not banking anything because it's not moving. So at the minute, just waiting for a decent setup on this, decent signal. There isn't anything. It's just not set up. Excuse me. There was a long back here. Nice reversal retest there on the hourly. So there was a long opportunity week before last. If you got into that, yeah, it's nice. Just 38 retracement. Very well done. Out. But right now it's just not doing anything. So there's the entry 2 weeks ago. There's a long, but you see how long, it's just taking forever, isn't it, really, at the minute, unfortunately. A lot of this. Yeah, bit of news, undo it. Nice retracement there. It's all easy to trade. You just got to try and find the opportunities to get in, and the RSI is just not pushing particularly hard at the moment. EuroCAD, there was an entry last week long. If you took that one, you're out probably. There's your reversal and retest out of propulsion. pushing up into propulsion. So you've got targets to the upside. This massive move here, obviously, is the potential. That's the election. So I think that's the election, isn't it? The 4th, 6th. Yeah. So it's either going to do that if we get sustained rallying on the US, or the US move's going to undo itself. But we've just broken out of a double monthly range on this, so I think there's potential for adding sells in there. But wait and see. So if we get up RSI extension on that this week, might be a good looking short. Again, euro, don't really mind which way I trade that. At the moment, I can only trade short on it because the swaps allow the swaps too expensive trading long on it, so I'm only short at the minute. Morning, Ismet. Euro pound, same thing. I'm looking for short opportunities. Didn't quite get an opportunity to get in on Friday. If this can continue to push up into here today, tomorrow, I'll be short on that. So yeah, looking good for a short opportunity. Again, it's range bound. It's broken out the double monthly lows. It's pulling back nicely on that leg, so I'm looking to get in short. So EA will automatically get me in on that if we get a continuation push up this week. Same on the 4 hour. Just about got an entry, but gap down. So just looking for that push to the downside. Euro New Zealand stuck sideways. This has really not gone anywhere in the last week and a half. As you can see, it's just flip-flopping around, but it is pushing up now. So again, shorts, if I can get any signal, you can see there's just ever so slight might have got an entry there last week. Previous week, you'd have had an entry there. You'd be in 3 on that and out now. But it's just really hard to, I mean, this is the RSI 21, 70, 30 level. It's just not even signaling. It's so hard to get into anything at the minute, which is why I'm going on about needing diversification in strategy more now, because the relative strength between different pairings it's either squeezy or non-existent at the minute. So again, these big sustained periods where we don't really do much. Euro US, again, everything is pushing against the US dollar. So that was my last exit on the Euro US before the election. Obviously, if anybody that took a reversal on the election, you got out there. But since then, US dollar been absolutely flying. However, it is stalling out now. So this Euro US dollar is the inverse of the US dollar index. So if you've got the US dollar index on your broker, it's exact opposite to Euro US. So as you can see now, we've 48 hours sideways. We've had a reversal alert and we've had a retest. We've made an ever such slight higher high. We've made an ever such slight higher low, but it's not very convincing. So it could turn into a flag break and go back to the downside. We'll see what happens with it. But yeah, so that's basically that one. Sorry, bear with me one sec, just adjusting. Quickly, indices. So hedged on the DAX. God, terrible this morning. Just not got any volume. FTSE, we've got a break long, kind of. It's like a spluttering car this morning. It's just not able to get anywhere. But long FTSE hedged on the DAX. I'm just going to leave targets in place where they are on the FTSE, the DAX rather, today. So this is the move from Thursday, which they came and re-added into on Friday. So if we can undo the propulsion move from Thursday, I'll get out. That's within ADR. Upside, that's within ADR, and it's just shy of the last week's high. So I'll look for an exit up here somewhere and exit down there somewhere. So they're pretty much spot on 5R targets. Just leave them in play. If they get hit, they get hit. If they don't, it's a loss. Today, if we can get a clean break on this, which makes $500 odd, pounds in this case, because it's a pound account. What's the TP there? Yeah, 330. So if we can get that target hit, which is my upside target of 3R, that's £660. We've got a £350 hedge, so I'll just bank the two, take the 200. But so far, it's just not really doing anything today, is it? One of them days. Euro US dollar, so yeah, stuck against the US at the minute. Everything is stuck against the US at the minute because the US has just been so strong. So we're just waiting to see when that unraveling comes, which will be at some point soon. But yeah, it's an absolute beast. We've got support coming up on the Euro US down here at ADR today. So if we do get a continuation push on the US today at ADR, we're going to start to hit some resistance on the Dixie. So I think this will be up here on the Dixie, US dollar index. Yeah, so traders watching the Dixie will be looking for exit positions at resistance, and that is resistance on the Dixie, which is obviously support on the downside on the Euro US. So yeah, potential pullback on that. This flag break short, which is the election, you can't really read technicals into this because this is not caused by a flag break continuation. It's caused by the election. So this move here really is the one you want to be looking at for a pullback if it was to continue. But I think the more likely move is going to be that. It's going to be the Fed announcing something, I think. But we'll see what happens. So Euro US dollar. At the moment, I'm only looking for shorts on this just due to the swap costs at the minute. So yeah, if we can get a pullback, I'll be looking to get in short. But if you want to trade it long, that is your upcoming area down here. So anywhere down here. Basically, if we break the lows from last week, yeah, so this little area here, and then that low, so that's part of an inverse head and shoulders pattern. This whole area, so breaking last week's low all the way down to ADR today. Nice little pop. Can Euro US dollar be a 1-to-1? Yeah, can do. Yeah, of course can. Yeah, we've been at parity before. We always bounce at parity. So parity is there. Yeah, you always bounce at parity. But that's 5 ADR or so. That's miles away. That's weeks away yet. And to get there, you know, I'm saying that's weeks away yet if we continue to be parabolic. Yeah, this is months away if we use market structure and we do what we do, which is not go parabolic. You know, look at that. Extend that. Yeah, extend that. That's 3 months to get there. Long way away yet. But, you know, you never know what's going to happen. But yeah, if we get a parity bounce is a very well-known strategy. Always works. You'll always get a good 2 or 3 ADR out of it as well. It really bounces there. Always does. It's all to do, and this is the thing that's, you know, this is the thing that's really important to understand at the moment, right? With what's going on now with Trump on board. There are an awful lot of correlations between currency price and trade agreements. With the US dollar yen, for example, if the US dollar yen rises above the 150 level, it becomes difficult for Japan to conduct its business and export to the US. Therefore, we don't often go above that 150 level unless there's a real strong reason to not do it, or a real strong sentiment really for that carry trade to be done. The Japanese always intervene. There is little point in having lower than parity trading on the euro US dollar because of the trade agreements. What's the one thing Trump is going to be doing in January? Ripping up every trade agreement and rewriting the lot. The Eurozone at the moment is crapping it because if he does what he's going to do, which is a 20% tariffs, they ain't going to be able to export. So all of the main exports from Europe, Audi, Volkswagen, Mercedes, basically any car you drive, basically, that all goes out to the US, 20% more expensive. What is that going to do for Tesla? Boing. Who's just suddenly got into government along with Trump? Elon Musk. Yeah. this parity level isn't necessarily going to act as support anymore, because he's not going to give a crap if it drops. The Europeans will, but the US won't. So, you know, this here back in 2022 was a different government, different arrangements. This is why the market is at the moment a little bit like, holy crap, Trump's on board, rally the US dollar, because that's what he does. He makes America great again. That's his slogan, isn't it? How do you do that? By making them bloody rich. How do you do that? Trade tariffs. And this is what triggers the war, and this is what he did last time. So, you know, you'll get a bounce. You'll definitely get a bounce, but whether it holds this time, I don't know. It's a tricky one. It's a call. Look, there you go. That's 1044, but the parity line. Let's get rid of these other lines just so we can see the parity. Oh, no, I got rid of it. Leave that one in play. Old all-time highs. There we go. So there's your parity before, look. So that's the last time we hit parity again there, which was back in 2000. Yeah, we had a big bounce. We pushed through, bounced down. We traded below it. Then we pushed above. You just don't get back down below it again. But it takes something extraordinary to take it below that level. Don't know what that 0.88 is. It's obviously another chart. Oh, wrong button. But yeah, I mean, this is we've only tested it once, you know, in recent times. But we'll see. We will see what happens. You know, it's one of those things with changes in trade agreements where you can't rely on historical information, because, and it's the same with interest rates. Yeah, everyone's like, and this is why technical analysis fails. People use technical levels and they go, oh, look, that's a beautiful bounce point. But what the situation financially for each country was at that point in time there, and what was happening in world events with conflict and things there and there is different. Therefore, there's no reason for that to happen. Yeah, if the reason now is that the US dollar is going to rally because Trump's coming on board, this means nothing. Technicals work when technicals work. Technicals work when there's nothing else to do. There's really something different to do right now. So, you know, but it's a long way away. So we'll see. It's always good to see. But, you know, from a bounce play, yeah, if you buy parity, buy the one, when we get there, you'll get 2 ADR out of it. It's almost like a given trade. Yeah, you can have it. The market gives it to you. And then if you want to hold it, those are the ones that make you a fortune. Yeah, if you can hold it, add to it, and sit there and don't touch it for 6 months, and it bounces at parity, you will pay off your mortgage. But it's more of an investment trade, isn't it? When I excuse me, when I see salary of my US friends, and also the Euro US dollar 1-to-1, it makes me sad. Yeah, I mean, it's a we'll see what happens with it when it gets there. But we've got plenty of other things to get through before we get down to that level, really. So Euro US dollar at the moment, I'm looking for shorts. So I'm looking for this pullback on the US to try and get some short plays on, but I can't. You know, if it's going to continue to rally, I'm just not interested at the minute. Pound, very much the same. We are very much sideways on it for the last week. We're not really gone anywhere. There's been no signals to get into anything. Ever so slightly just got an extension on the RSI the week before, a couple of times. You know, but it's just, there's no signals on it. Last entries we had were all the way back here. You can see this area just behind my head is an RSI extension. But there's my trades, short and out. Haven't had any reason to get into this since then. So just sitting around at the minute. There's a 4-hour RSI extension the week before last. Last week you got nothing. So you had a long there. But other than that, we were short here. But yeah, sideways, sitting around. So the bias on this at the minute is kind of neutral. The Aussies aren't changing interest rates. I don't think there's much chance of us changing the pound ones for the next 2 to 3 months. So news is going to move it. That's about it. I have to, on all the pound pairs, I have to have a kind of more of a short bias on it at the moment, which is annoying because the swap costs are expensive to short it. But with that Rachel Reeves budget, market not happy, and they've got good reason to not be happy because what is going to be good potentially for the government and for debt control is going to be bad for business. Bad for business is bad investment. Less investment means weaker currency, which means higher unemployment. Yeah. So what she's basically done in that budget is stick a sticking plaster on the borrowing, but long term, I don't think it's going to help, and I don't think the market thinks that as well. And that you can see that by the reaction to the budget. So I think long term, your shorts are going to play out faster than your longs, but short term, we are driven by interest rates and news. So right now, if we get any big pushes to the downside, I'd be happy to long them, but only on pairs where it's not going to cost me an absolute fortune, and this one would. So there's no trades on this. There's no signals at the moment to get in. Pound CAD, I've got long on at the moment. So waiting to see if that plays out this week, looking for a retest of propulsion. So we've got all these weekly levels here. So as you can see, my TP is below all of these weekly levels, sitting in this propulsion gap. So I'm looking for a propulsion test and potential continuation to the short side. Obviously, if the US dollar weakens, this is going to hit target very quickly and easily because the CAD will get dragged with it. But wait and see what happens. But it's just stagnated since I got inlet. So that was the entry. Sideways, a little bit of a dip. Sideways. So this week, hopefully we'll get back up into propulsion, and then they'll either add or the propulsion gap won't hold and we'll be back up inside this range again. But one of those two things guaranteed to happen. Pound New Zealand, again, sideways. There was a little long back here, which you would have had 2 entries and an exit on. But again, you can see just the relative strength index. There is no relative strength on this. Yes, it's moving, but there's just so much of this. It's just not got enough legs at the moment. Tricky pair to trade at the moment. I can't trade it at all. I'm not trading the Pound New Zealand at all at the moment because the cost's too high. So you know, it's just sitting around doing nothing. So if you get signals on it, it's worth a go. But just bear in mind it's expensive. Last entries you had on this were up here. You've had short exit on that reversal alert. So yeah, right now it's just flip-flopping. Definitely bearish, but you're coming back into an area of balance. So we've had balance, price discovery failed, balance, price discovery failed. We're coming back into balance again. So this could really go absolutely anywhere. 2 big nice propulsion gap targets. That one, I mean, that's pretty much filled, isn't it? So kind of scrap that. So you got a nice big propulsion gap target to the downside there, which is a sort of a 71 retracement on that. They resold the previous turning point. So yeah, bang in the middle of where it could potentially go here. So flip a coin, but take a signal. So you had a long last week, which you may or may not be out of. Pound US dollar. So again, we know what's going on with the US. This thing's just utterly relentless at the minute. But when it's going to turn, it's, I reckon, going to turn fast. I think we're going to see a good couple of ADR back-to-back days where it just undoes loads of it. So getting up into here is only 175 ADR. Yeah, 12% chance. So there's a 1 in 10 basically chance of getting an ADR day up in that level. Swiss yen ADR. There's your first ADR of the day on the Swiss. Yeah, a lot of volatility overnight on that one. So yen weakness by the looks of things. at the open, a little bit. Pound US. So yeah, so this leg here, you know, stick a fib on it. This is a 50% retracement. This low here is just shy of a 61.8 retracement. So if this move's going to carry on the US dollar, I can see them basically undoing that very, very fast on some news, possibly the PMIs on Friday. And then we'll see what happens with the US. Are we going to continue strength, or are we going to flip and revert back to where we started before Trump gets in? That's one of the plays that a lot of people have been talking about, is a mean reversion back to the election, which kind of makes sense. So this is obviously where we had the election and we started moving with the US. He comes back in January. So let's get back up to there for when he gets in and then see where we go. But all the movement on the US from now until January is going to be based on what he says he's going to do when he gets in January. There's a lot of talk, a lot of nervous talk from other countries about trade agreements and things, but he hasn't said anything in stone what he's going to do. So at the minute, the US is a reaction, I think, to we should be expecting it to be good. But he hasn't really said anything yet, has he? So we'll see what happens. But I've had a reverse alert from Friday this morning. So this could potentially start a turning point. You can see the price action on this is very, very, very clear. You've got a high, a low, lower high, lower low, lower high, lower low, lower high, lower low. As soon as we get a higher high, higher low, that is your daily structure break. That could be the catalyst that starts it off. But it's going to need something to do that. And we've got no US news coming up. So there may be some positive pound news coming in tomorrow with the monetary policy hearings. The CPI for the Canadian dollar may rally the US if that pops. You know, there's all sorts of stuff, or may drop the US rather, if that comes down as well. So we'll see. But right now, you'll only be long on this, because if you know, with any mean reversion strategy, which position trading is, you'll have only had signals to go that way. So you know, but you had this like 3-week period of just not doing anything. So it's just a pain in the backside at the minute. But again, cost wise, for the pound US dollar, pays to go short, doesn't pay to go long. So I'm looking for those pullbacks. So I'm looking to get up into here so I can take a short on it. So a lot of people will be getting out on there, as I will be getting in. New Zealand dollar. Just catch up on the chat. Antonius, how can we get a swap indicator? How can we get that swap indicator? It's on the Position Trader EA. So this is all part of the Position Trader EA. It's got a swap filter built in here. So use a maximum overnight swap limit. If that's set to true, it displays the swap and it only trades in the direction of the swap that you set. And you can set how expensive you want your swaps to be before it won't take trades. So for me, I've just picked $5. So anything that's 5 or below, I'll trade it. If it's above 5, I'm not going to trade it. All that is from your chart, look. So if you go to anything in your market watch and go to not symbols, go to specification. There you go, New Zealand CAD, aren't we? Go to specification, it's there. Yeah, minus 1.1, minus 5.9. Yeah, so it's there. It's always there. But for me, I've built the indicator. I've built the filter into the EA because it's too expensive for me to, at the moment, trade against swaps. That will change as interest rates calm down. Assuming they calm down, you know, we don't know what's going to happen with interest rates in the future. Everything's different since COVID. Yeah, it's become more different over the last 18 months and more expensive to trade. It's one of those weird things. This job, I've never paid attention to swaps because they've never been a problem. It's only when they become a problem that you identify them. So, you know, it's something that I've got to pay attention to now. Paying 30 grand in swaps over a quarter is not really an option. But I've never done that before because we've never had swap fees so high. So now we have got swap fees that high. I'm not going to do it. So when they calm down, but it's just very expensive to trade now. On certain pairs in certain directions, this is the thing, like the pound New Zealand. So it's good in a way because pound New Zealand for me, it's 960 to go long, it's 810 to go short. I'm not trading it. I'm just not going to trade it at all because it's just too expensive. There's plenty of other instruments out there and there's plenty of other setups going to occur, meaning that I don't have to take a chance on it. It's all about controlling your risk, and part of that is taking trades which have got more chance of playing out profitably. If I trade this in any direction at the moment and it does this 1 2 3 4 5 6 7 8 9 10 11 12, let's say I'd gone short 13 14 15 16 17, I'm probably out in 18 days. 18 days paying that overnight, it's just going to make it unprofitable. Yes, I will make profit. Yes, the trade will play out, but I'm not going to make much money. I'd rather focus on the stuff that I can make money on quicker and easier, that isn't going to cost me. That's just my decision. But you don't have to use this. I haven't been using this. I've only introduced this in the latest version of the EA, which was only released last month. Yeah, I haven't been using this all my career. So it's just something that I'm now looking at because it's now important. But if it's not important to you, don't use it. It's not the be all and end all. And like I say, if I see a really good setup, I might still take it. So it's not the end of the world. That's sitting at 590. Mine is 5. If I see a really good short, it's 90 cent different, so I might just go in anyway. It's not the end of the world, but it is something you've got to pay attention to now, unfortunately. Very sideways. We are very bearish on this. Obviously, Canadian powering up with the US. New Zealand dollar's been dropping interest rates, making it weak. So, but I'm long on this at the moment. Only got a single on it. So it was this entry back here. So we got an embedded RSI. First entry taken. Nice retest. Structure break. Reversal. Pushing up. Looking for a propulsion gap test up there. Dropping down this morning. So looking for this propulsion move as it held on Friday to held again. So I'm looking for Friday's low to hold up and propel me up into there. See what happens. New Zealand, US again. All coming down. Long on this one at the moment. Again, this is a great example. Swap long is 280. Swap short is 180. They're both costing me money, but not a lot. So I'll trade it in either direction. So it just happens, obviously, it's very unlikely you're going to be anything but long against the US dollar at the moment because it's been doing nothing but that. And if you're a mean reversion trader, you don't get in until it's done that. So I'm long on that at the moment. Just the one from last week back here. Target I haven't really set. So my EA is automatically going to get me out at 1 ADR. So anything that moves 1 ADR, it'll automatically exit me anyway. But for me, manually targeting, not worth a lot of money, is it? I'll go up there. But I'll be out before that anyway. So yeah, long there, obviously, at the moment. That was the last long I had on, which took, again, see, 4 weeks to get out of that. Wasn't expensive, but still 4 weeks. Got out before the election volatility, and we've had last week as a bull week on the US. So this is pushing down at the minute. My next entry is down here. We're at these lows. See, if we break these lows, which we're accumulating at now, and we don't pull back on this leg, there's not a lot of support coming up until we get back down here. So we 150 ADR. So a next entry is going in here. I may get one more in before we hit that level, in which case then we're looking for a pullback on that leg there. So wait and see what happens when we get down there. US dollar CAD. Yeah. Do I need to say anything about the US dollar CAD? Things evil. It's absolutely massive extension. If you measure the last extension, I mean, that pulled back 78% of that move. So if you measure that last extension that we had of this sort of magnitude, it was 683. We're sitting up at 692 right now. So you're looking for a 38 to 50% retracement on that. So we've got this area here, potentially, but you know, we'll have to wait and see what happens with the US. But yeah, this is shot. It's you know, whenever you get these big, strong parabolic moves, you tend to get the V-shaped recovery off the back of them. Yeah, it's just what the market does, and it's all part of either a 50 or a 61.8 or a 38 retracement. It's always the same. So we didn't get one off of this move because it was the election, and the election's gone the same way as that. If Kamala Harris had got in, we'd be down here. She didn't. So you're looking basically either for that to be the move and this to be the origin, or the whole thing, but you won't know which. So assume if you're in this, you want to get out on that sort of pullback on this leg. I'll be watching these highs pre-election as your downside support. Yeah. So 175 ADR to the downside. You're potentially going to get a bounce out of that, but whether the bounce is a continuation or the bounce is just a bounce and market structure continuation, we'll have to wait and see. But yeah, it's got to move first. It's got to come down, and at the moment, it's just struggling to stop. So we put a new sort of all-time high, if you like, in on Friday. Yeah, waiting for that pullback. So lower time frames, you've had a reversal alert on Friday here because we pulled back and retested. So watching that weekly high, if we get any type of resistance there, I mean, from a stop loss perspective type trade, you know, give it a quarter of an ADR or so up there, this thing could be a very, very, very profitable short. But we'll wait and see. We need to see what's going to happen. And as I say, this week we are very much back weighted. US news is Thursday, Friday this week. The CAD CPI is potentially something that could move the US. But it's, you know, it's in its own zone at the moment, isn't it? Because of Trump. Gold. Oops. I don't trade gold, obviously, but it's inverse US. So obviously, this is just another US dollar cross. So it's the same as all the other US dollar crosses. It's collapsing. So we've had a nice reversal and retest on Friday here. So we didn't put in a higher low. However, today we will be. So if we can keep the price of gold up here and keep it above Friday's low, you are going to be putting in a higher high and a higher low, which is a reversal on that, which on a daily time frame is basically, for those in the member stream, on a daily time frame, what would these 3 days back to back be? This is where all the members keep quiet. 3-bar reversal. So this could be the catalyst that drives this. But we will see. Gold looking good for longs, but it's all down to the US dollar. There we go. That is everything. Tomorrow's members stream. I'm obviously going to do one tomorrow. I haven't quite decided what I'm going to do yet. So I've got one of my projects that is ongoing at the moment is a breakout EA. And somebody's posted something, Outro posted something in the members group about somebody that's got something similar by the looks of things. But it's very similar to the ORB EA, basically. It looks like he's just done the same as the ORB EA. But what one of my projects is to build an EA for intraday trading. specifically for those that are doing prop, basically, and also a support resistance bounce EA. So those are the two main projects that I've got kind of going at the moment. So what I'm going to do tomorrow is focus on those. If I haven't got anything ready for testing tomorrow, which I probably won't have, I might have, depends how far I get along this afternoon. But the support resistance bounce play weekly, monthly EA is fairly quick and easy to build, so I might just quickly knock that up this afternoon, although there's a million ways to do it, but I'm going to try and do that. So tomorrow we'll be looking at support resistance bounces and also the index project that I've got going on. And the index project basically is kind of an amalgamation of what I do on index trading. So it's a little bit like the opening range breakout EA. So at the moment I've got two EAs for trading indices: opening range breakout EA and the stock index hedge EA. The price action toolkit is also usable for indices because it just trades pure price action, obviously. So the main ways of trading on the indices are you trade the open and then see what happens. If the open hasn't been profitable, then you look for a new setup. Most people will then look for support resistance bounce play sets. So they sit and wait for one of those to get hit, and then they'll try a bounce play off of that. If that works out, you make back the money from that. It's a profitable day. If the support resistance bounce play doesn't work out, it usually means because your ORB trade hasn't worked out and you've got to support and that hasn't worked out, you're in a trend day. So then you start looking for trend pullback plays. That's what you basically do when you're trading indices. Virtually everybody does the same thing. It's not about identifying what the best risk reward ratios and things are. It's about identifying the patterns that appear during the day and what the likelihood of them is. So if you're opening with a if that is yesterday's high and yesterday's low, and we're opening here, yeah, the likelihood is the market's going to run for one of those. So your ORB is a good setup. If, however, we're opening here, you don't want to be looking for shorts. You want to be looking for breakout longs at the open. If that doesn't happen, you're looking for a support bounce play. So the EA that I'm looking to develop and build will be based on logic of, if we are opening in a specific spot, look for this type of trade at the open. If that isn't going to work, do this. If it does work, well done, that's it. Then you can decide, do you want to try and get another trade out of the day or what? So it's basically a building kind of my logic, if you like, or my approach into as much automation as possible. But obviously everything has got a discretionary element to it. So if at the open it is half an hour, we're in the middle here and we're going to go, yep, we can take an ORB either way because yesterday's high and yesterday's low is miles away. However, at 8:30 we've got the Euro CPI number coming out. That's probably not the best trade to take, is it? The best trade to take is to wait until the Euro CPI numbers come out and then try and short the highs and buy the lows. So I want to build that logic into an EA and just see how it gets on with automatically trading the standard logics that everybody plays. So because they're kind of similar projects, like the one we wanted to look at was daily monthly bounce plays on FX, it's going to use the same sort of logic. So it makes sense to kind of develop the two projects alongside each other. So that's what I'm doing, but unfortunately it's just time for me. So if there's anything else you want to cover in those member streams tomorrow or Thursday, let me know. But that's my plan. And if I haven't got anything ready to actually use, then what we'll do is we will go through the logic and look at it basically, and look at the logic of trading those setups. But the reason I want an EA to do this is to stop the over trading element, which is basically what SIH does. So the whole reason I love this strategy is if the trade hasn't worked out, I wait. I'll wait and see if we get there. And if we don't, we don't. We make a loss. But what it stops you doing using automation in your trading is it stops you over trading. So now I'm going to start looking because I went long and I stopped out and it's gone short, if it comes back and stops out on the short, what I'm going to do then is get cross and overtrade, and then you start making mistakes. So the whole purpose of using EAs is they will just do what they're told to do. And if you've got something you want to do but you can't control it in your head, the EA will do that for you. Yeah, it controls your emotions basically, doesn't it? So that's the reason I love this particular variation on the strategy, because it only takes one trade a day and it either works or it doesn't. The days it works, it kills it. The days it doesn't, it usually makes a break even, or it makes a little bit of money, and it has losing days every now and again. But that's trading. But what it doesn't do is have any emotions or get cross. So that's, you know, and that's what I want to build in. I want to build me into an EA, if you see what I mean. And then just see how it operates. And it's just a case of fine-tuning the logic, really. But, you know, today's a good example of, you know, identifying potential market conditions. So if you look at the days that we've had on the FTSE, for example, so we've had 3 bull days back to back. Yeah. And we're opening at the highs of Friday and Thursday. Yeah. Well, they sold off Thursday, and Friday we couldn't break through Thursday and they sold off. We're opening up here again. What are we doing? Opening at resistance. So what's it likely to do? Drop, because that's what it did for the last 2 days. So is it a good idea to have an opening range breakout long? Probably not. What's happened today? We've tried to go long and it's failed. Yeah, it's obvious logic. But there's always a 50-50 chance that it will break that level and fly through, in which case, where's it going? Well, if it goes through that level, there's nothing but clear air from Friday's high until the high of the previous week, which was the previous support area. So if that long failed and it didn't trigger a short, and then it breaks long, we wait all day and see if it gets there. If it doesn't get there, do nothing. There is no setup. But there's not just one instrument, is there? We can trade the DAX, we can trade the FTSE, we can trade the S&P, we can trade the NASDAQ, we can trade the Dow, we can trade all sorts of stuff. So there's 5 indexes. So my plan is to get one EA that does everything together, but uses logic to say, if there isn't any setups, don't trade it. But obviously there's an awful lot of work that goes into the logic on that. And there's a lot of ifs and whens and buts. The other thing as well, which I've just started a futures account with Top Step again, just because I wanted to have a play with it. They had a deal on, and I do get tempted in by those deals every now and again, just to see how it goes. So I've got a 100k an account and a 50k account going. And it always reminds me when I start trading it, how annoying and frustrating index trading is when you do it manually, because you have these days which I make $1,200 or $1,400 profit. Then I have a day where I just get chopped to death all day and I make a tiny little loss or a tiny little profit. Then you have these big days again where you make, it just goes and you just make it. The opening range breakout goes and you get both of them and you're like, wow, that was easy. But unfortunately, I can't make more than 1,400 a day because they won't allow me to use more than 50% of my profit in my portfolio for my results. Yeah, so I have to stop at $1,400, even though the thing ran to $6,500. I have to stop at 1,400 because the rules are there to stop me making money. But anyway, but it's that sort of logic that I want to build in as well, which the opening range breakout EA, the ORB EA, has already got in there, because it's got targets, it's got loss targets, and it's got profit targets, which you do need when you're trading indices intraday, because if you get a day which does that all day long, you are going to die. So you have to stop yourself trading, and that EA will lock you out at that amount of money. So, but you know, these days, you get one of those happening on 5 instruments in one day, job done. Which I had. And then I had a terrible Friday. Friday, I got absolutely killed. Everybody got killed, actually, I think, on Friday, because everybody was trying to long the NASDAQ on Friday. And they failed. But yeah. But look where it came to. And why did it bounce there? I have no idea. If only we knew where the orders were. But anyway, that sort of stuff I want to build into it. So with your extreme drawdown control, the video says you risked approximately 1% with a stop. Are you still running all the existing position trade entries beyond your 3% drawdown level? I don't know. I don't know what video that is. There's a few drawdown control videos. That one. There's that one. There's that one. There's those three, actually. Those are the three drawdown control videos. I don't know. Drawdown control basically is a percentage of whatever you've got on size-wise. So if I was going to do drawdown control right now, aggressive drawdown control right now on Aussie dollar, US dollar, I'd be looking at, I've got 0.32 short on. So if I'm going to take an aggressive drawdown control position, it would be somewhere up to 100% of that size. But I usually go with around about 75% of the size on. So in this case, I would be taking somewhere around about a 0.25 short. Because all aggressive drawdown control is there to do is bring this average line here closer to price. So if I now take a 0.25 long here, that line will jump down to there and I'll be able to get out within 2 hours. That's the whole idea behind it. It's literally an emergency stop. And it has a stop loss on it. So it's a high risk trade. It's just a normal trade. The way to think of aggressive drawdown control is as a normal trade. So this isn't working out, this position. I'm going to see a reversal alert and a retest at an area of previous support, and I'm going to go long with a stop under the low. So I'm just going to take a normal trade. But that normal trade, the lot size of that trade is determined by the lots that you have on that position. I may be using examples where I've said 1% or 3% or something, but it's whatever. But the 3% drawdown level I think you're talking about there is how much drawdown I'm in on an individual position. That's a number I pick, you know. It's down to personal preference. Up to you. There isn't an answer to that. So I've been sitting in 5-7% drawdown without doing aggressives. I've also been sitting in 3 or 4% and doing aggressives. There's no way for me to say this is what to do, because there is no 2 days, weeks, or months, or years which are ever the same. So you can't say when it gets to 3%, I'm going to do aggressive drawdown control, because I might have banked 15% and I'm sitting in 3% going, well, it looks like it's going to bounce soon. I'll wait and give it another 2. It's totally discretionary. But if you want to set hard rules, that's what the EA is for. Yeah, the EA will set hard rules. So drawdown control, you can set a maximum percentage. Aggressive drawdown control, you see mine is set here, look. It's not set to true, but it's set at 4.5%. So if an individual position gets into 4.5% drawdown, it's gone wrong, and it's gone wrong for weeks to get there. I don't get to 4.5% of drawdown without something pushing for at least a month. I will take 3/4 of the size I have on as aggressive. But you could set that to 3. You could set it to 1. You can set it to, again, all this stuff you can do all of this back testing. You can set, do a system parameter permutation test with that set to true, with that set to 1 to 10%, and with that set to, it's got to be at least 50%, but set it from 50 to 100. And look at all the results you get from the system parameter permutation test. Look at what the drawdown was overall by doing it at lower percentages. Look at what the profitability, how the profitability is affected. But there's a number of different ways of doing it. There isn't a right or a wrong. It's a personal thing. If you are uncomfortable when this gets to 3%, which some people are, that's when you do it. If you're uncomfortable when it gets to 1.5%, which some people are, that's when you do it. If, like some other people that are in the members group and in the position trading group in Discord, are sitting there in 7% and they're comfortable, they're not even doing it. It's totally discretionary. But at the end of the day, you have to look at, with aggressive drawdown control, and that's what I mainly cover in these videos, is where price is. So with the US dollar CAD as an example, look at my aggressive drawdown control. Euro pounds just hit ADR. What's going on with that? Let's quickly look at that. Big strong move up on the euro this morning. Strong euro. Very strong euro move going in. This is Guindos has been talking this morning. Impact of the trade tensions on inflation so far seems minor. Trade tensions may keep interest rates higher. There we go. So that's what's triggered that. So ECB basically Nagel saying likely we won't drop interest rates now because we're not sure what's going to go on with the trade. So the market is probably reading into that. We won't be dropping interest rates or amending interest rates until January/February, which means there is no reason to drop interest rates, which makes the euro bullish. But whether that sticks, we'll have to wait and see. US dollar CAD. So when you look at aggressive drawdown control positions here, I had loads of aggressive drawdown control positions on here because it was bailing out. It was basically stagnating. And I'd done a load of drawdown control. But look at where I did, right? This is the important thing, and this is the takeaway. Look at where I did the aggressive drawdown control positions. At support and resistance. Why? Because you get bounces. There are, at every support and resistance level, there are limit orders by banks and institutions to defend that area or to take profit at that area. So every time you get to support resistance, you get a bounce most of the time. With aggressive drawdown control positions, we're not looking for a huge position to be placed to make an absolute fortune. We are looking to get in and move our average price, which was there or wherever it was, up to a point where if the bounce works, we can get out and go, that was crap. I didn't lose any money. That's the point of aggressive drawdown control. It's not to make a fortune. It's to get you out of the position because the position is wrong. It's a loss. In this case, it was a loss recovery because I had losses here, which that paid for a good amount of it. But for me, that there was the logical spot to execute it because we had the election coming up. And what I was saying all the way up into the election was, I want to be flat by the election. And I don't care how I do it. If it means I have to get out and lose a load of money, I would do that. But I'm not going to chance it. Because if it happens, it's going to potentially blow your account. You've got to make those decisions. And that's what aggressive drawdown control is about. But you're only going to need to execute it on the 10% of trades a year that don't work. Yeah. So it's an important skill, but it's a skill you're not going to use very often. But if you execute it at support resistance, it's got more chance of working because the limit orders are going to move the market. Yeah. This is why it works. Yeah. It's not bouncing from here for any other reason than the banks have orders there. Yeah. The banks bought it. Yeah. As they're long, they place orders to defend the zone. As it comes back, they place more and they place more. Some people call them iceberg orders. In the futures market, you'll hear them referred to as icebergs. Yeah. So if you need to get out of a long position that you have gone long, you miss the exit, let's say. Long, you miss the exit, let's say. Long. And we get to this zone after going, you know, let's say our average is here. We haven't managed to get out on it. The next time it gets there, around about this area, if you long it with an aggressive drawdown control position, there's a high probability of at least a bounce. If it's going to do that, fine. We only need that part of it. If it's going to do that, fine. So what you're doing with aggressive drawdown control is you're putting 2/3 of the odds in your favor. It's either going to reverse, fine, bounce, fine, or do nothing, stop out with a loss. But there's two things that can happen in your favor. It can either reverse with an A-shaped recovery, pull back and continue market structure. That's enough to get you out most of the time. Or it doesn't work, in which case you lose. That's it. But that's the purpose of aggressive. But the level that you do it at is up to you. And I've kind of started to use more of a regular scale out now, because I'd much rather just take money off and take small losses along the way, because we've had such a squeezy market, than try to get these aggressive ones on. But you know, the other thing which is becoming a little bit more obvious to me now, after, you know, it's always hindsight teaches you the lessons. After looking at the biggest squeezes this year, and then looking at the swaps on the positions that got into the biggest squeezes this year, this thing would have kept me out of most of the squeezes this year. There'd be very few squeezes I would have been in this year if I'd have stayed in line with swaps. Which makes sense, because the banks have to pay these as well. The banks want the market to go that way because it's easier. It's always with trading, it's always the path of least resistance which is traveled the most. The swap trade on the US dollar yen, yeah, it does this because it's easier to make money than to do that. Yeah, that's an intervention. That's an intervention. That's an intervention. This is the path of least resistance. It's a positive interest rate. Therefore, if I place an order long, every Wednesday I get paid 999.55s. Brilliant. Just press the long button. If it comes down and it goes into drawdown, don't worry. We've made money on swaps. When it goes back up again, we'll just take it off at break even, but we'll make money on the swaps. That's the bank's philosophy behind the carry trade, which is why it's always done this. Now, the interest rates are starting to rise in Japan. When they get up to a point where they're around about 1.5%, and the interest rates have dropped on the US, if they do, to around about 3%, this thing isn't going to be in existence anymore. Therefore, every single back test you've ever done on any of a US dollar strategy, which is trend based, because that's what everybody does with the US dollar yen, they do trend strategies on it, ain't going to work, because this thing isn't going to trend if there's no reason for it to trend. Market's adapting, market's changing, you have to adapt with it. But that's basically what it is. So why would you not be back in the US dollar CAD short now? Because I don't know what's going to happen. What's the US, you know, there's two reasons I'm not back in short. Swap, number one. Yeah, it costs me 960 to hold a short. Yeah, it costs me nothing to go long. That's reason number one. It's too expensive. Yeah, this trade here, from here to here, cost me $4,500. $4,500 it cost me to short that market. And I made a 10 grand loss on it. I don't want to short it because it's too expensive. I would have made a 6 grand loss on it if I hadn't have traded with, if I hadn't have traded against the swap fee. Second reason, Trump's in. They like it. Yes, it's massively extended, but I do not want to take risk in that way unless it's going to be cheap for me to trade it. So that's why I'm not in it. It's extended, yeah. I mean, it's a perfect setup. But the other reason is, which I've again covered in the live rooms, it's clear air. It's absolute clear air. From there to there, there is nothing to stop this. Dangerous. I don't need that danger in my life. After losing nearly 10% of my account on one position, I don't need that danger in my life at the moment. There's a lot of other better things to trade. But it's a, you know, this is the thing with, there is no way of knowing what's going to happen to this. I'm saying in here, this move is equivalent to that move. Look what happened after this move. Yes, high probability. Yeah, if I was a betting man, which I am, but I would say the odds on this dropping are around about 65-35 within the next 2 weeks. And not just dropping, I'm wiping out 50% of that move. However, we've got a new president coming in, and we've got the old president just supplied Ukraine with a load of missiles basically to shoot into America's main enemy. What would you think is going to happen to the US over the next 2 weeks? If you can't answer that question, don't trade it, because absolutely anything can happen to this thing. But what I do know is the Swiss franc is likely to rally, so I've gone with that. But you can't tell what's going to happen with it. Yeah, it could well do that, but if it doesn't, where's it going to go? It's absolutely got no resistance to the upside. And this is not a normal trade. Yeah, so whenever you do any back testing on any strategy, you are trading through wars, oil embargoes, gold embargoes, changes in leadership, pandemics, all sorts of crap going on in the news that you weren't expecting, spikes that got caused by somebody saying something, then changing their mind, and all this sort of stuff. All this is going on in the back test. All you see is that. Yeah. In the real world, day by day, you can make decisions completely different. That RSI extension there is a short. If you believe that Trump is not going to put some kind of embargo on trade. If you believe Trump is going to put an embargo on trade, it's going to be good for the US dollar. Is that a good short? No. Technicals have got nothing to do with fundamentals. The reason I don't like this at the moment is because it's costly from a trading perspective, and the fundamentals are Trump. But it's binary. The market is binary. You only have two things that are going to happen. So you are going to short this and it's going to come down, or you're going to short this and it's going to go up. It's what you do with it. Having come out of a trade, which I got into there, and being stung, my psyche's just not interested at the minute. But somebody new coming in that's just done the boot camp this weekend and is walking into this going, beautiful H4 RSI setup, they hit the short button, or they use the market reverse alert, so the position trader EA gets them into a short, and it comes down to there, they'll be like, wow, this is brilliant. Yeah, if you've been sitting in here with me for the last 8 weeks, you'll be sitting there going, he was brave. But he has no idea he's being brave because he hasn't sat through this. He may not even, I mean, obviously everybody knows what's gone on in the election, but he may not have any inclination that Trump is affecting the direction of the US dollar. Yeah, you trade what you see and you get in. And this is why I keep saying it's got absolutely nothing to do with your entry. Making money is got nothing to do with the fact that the RSI was extended. Making money is to do with what you did after you pressed the buy sell button, and what the market did after you pressed the buy sell button. So when you press the sell button there, if you got out there, you made money. If you didn't get out there and you pressed the button there, you made money. If you pressed the button there and you didn't get out there and you didn't add there, you still made money. Yeah, because that RSI was extended there had nothing to do with you making money at all. What you did afterwards did. This is what position trading is all about, and it's managing the risk. And aggressive drawdown control is part of managing the risk. And everybody will manage risk differently. I can't give anybody, if I gave everybody an exact formula of this is the risk, this is the max you need to go to, you have to do this here, there, and there, and there, and there. Unless you're using an EA, no one will get the same result, not one person. I could give 100 people the same strategy and no automation and tell them to execute it perfectly. I'll get 100 different results, 100 different P&Ls. Some of them will blow the account. Some of them will make an absolute fortune. Others will come out of break even and go, that was all right. It's just totally random. This is totally random. Market movement is made by bank and institutional supply and demand intraday. There is nobody on the planet that knows what that is, because every bank has an individual unique number of dollars sitting at each level. If that is higher than that, the market goes down. If that is lower than that, the market's going to go up. Every single minute of every day, these numbers are changing. There isn't a person on the planet or a system or strategy on the planet that can predict price movement. So if you're looking for the holy grail of indicators, strategies, you ain't ever going to find it, because it's different every day. This is the thing. And there's no best way to do aggressive drawdown control. There's no best way to use an RSI. There's no best way to use a market reversal alert. There's no best moving average to use. They're just different ones which allow you to get into the market. But getting into the market doesn't make money. Getting out of the market makes money or loses money. Yeah. This, I can get out of the market right now, here, 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 and here, and put that down there and make money. Does that make me a good trader? No. It makes me money. And then I'll just wait for the New Zealand dollar US to go green, and then I'll put it down there, and I'll wait for that to go green, and I'll put it down there. That's trading. I don't want to get out of the Aussie US now because it's red. When it's green, I'll get out. But if it just goes like that, red, green, red, green, red, green, red, I'm not going to get out. I'm just going to sit here and wait and see what happens. But it's not in my control. It's in the banks and institutions' control because they're the ones making my P&L go red and green, not me. It's not going red or green because I'm pressing buttons or I'm analysing the market or I'm doing anything. I'm not going, oh, yes, this is a perfect short. It will go red or green if it goes up or down depending on whether I press the red or the green button. That's literally it. Everybody else is trying to sell a system or a strategy or an indicator or something that predicts the future. The only thing that does that is a DeLorean, and I ain't got one, unfortunately. Trading against the larger swap is like swimming against the current. The swap filter is almost default trend filter. Well, this is what we'll find out. Obviously, this is my first month trading with the swap filter. So yeah, we'll see. If you look at swaps and how often swaps change, I really want to find, and I've Googled and I can't find anything, but I'd really like to find a broker that has got a historic swap database. There must be one out there. Brokers must store, some brokers must store their swap fees day by day. I'd love to be able to get that because I can turn that into an indicator, that data, and we can plot the swap fees on a window and see how price is affected. I'm thinking personally, now I've looked into this more, the swap filter acts like the carry trade. This is the carry trade of the US dollar yen. Why is it a carry trade? Because you can't short it without costing you money. You make money. They actually pay you to trade this long. The banks get paid to long the US against the yen. So in effect, this works like a trend filter in theory, doesn't it? But I can't prove or test the theory because I haven't got access to the data. So if RoboForex turned around and said, here you go, here's 10 years worth of the swap fees, and this is how the swap fees have adjusted every day, I could build an indicator to plot that. And then if I can build an indicator to plot it, I can build an EA to only trade in the direction of it, like a moving average. But if that was the case, you could use a moving average, which should, in fact, mimic these. Which one? I don't know. But I do know moving averages don't work. So, most of the time. But moving averages work in trends. Yeah, moving averages do work in trends when a market is trending. But by the time you've identified a market is trending, it's too late. You've missed the move. You only get the little bit left at the end. This is the problem with trend trading. Why nobody ever makes money trend trading? Because everyone goes, oh yes, you get in at the start of the trend. So identify when there's a start of a trend and hold it all the way. You won't hold it all the way. Because every time there's a big bear candle like that going, you'll jump ship. But if you were to only trade in the direction of it every time there's a pullback on the RSI, and there's a set file for that, for the market reverse alert CA, that would work. But only works when the market's trending. The market only trends 20 to 30% of the time. The rest of the time it's mean reversion range bound. And we go round in circles again, don't we? What I find super interesting is no matter how mechanical you attempt to make your entries, the reality is the edge is you. Yeah. Ultimately, you still seem to make most of the critical decisions. Yeah. This is why I keep saying you can't learn a strategy. And it's been proven to me, I've been doing this for 17 years now, and I've traded hundreds of strategies that have been given to me by hundreds of mentors, people that I trust, people that I know have been profitable. and I found on the internet, I've tested, and this is what we've been doing in the members streams, isn't it? Testing strategy. Yeah, we've been building out EAs going, does it work? No, throw it away. And that's what I've been doing my whole life, is building and testing strategies and throwing them away. Because it doesn't matter if you have been doing this successfully for 10 years using this exact same strategy. You give it to me and I'm not going to do it the same. Because I'm on holiday. I've had a bad day. I had a losing run. I slightly adjusted this. As soon as that's done, everything that's happened in the past and everything that's happening in the future is different. Because as soon as your P&L changes a different way to what it should be, the decision-making process expands. Yeah. Think of it like the multiverse. Yeah. We go along like that. Yeah. And my mentor says, okay, the strategy says right now we go long with one lot. Yeah. I'm on holiday. I get back from holiday. I've had a late night on my flight and I get back and go, 5 hours ago, he said go long with one lot. I am on a different timeline to him now. What happened to his one lot trade is it pushed up and he got out 2 hours later. What happened to my one lot trade was he was out, I didn't know about it, and I just got in. Mine goes the other way. This will never converge. Yeah, unless you shut it and start again. By shutting it and starting again, you've created a new timeline, because now you've got a massive loss on your account that he hasn't got, and you are now going to do something different. Just going to use 1.1 lots because I got to catch up. Again, you created another timeline on that timeline. Yeah, it's all discretion. The only way you will ever get exactly the same trades as anyone else is if you use exactly the same broker, have exactly the same execution. You never lose internet. When he's got it, you haven't, and he's got it, you haven't. Something doesn't go wrong with your computer, and you use exactly the same set file on exactly the same broker. That's the only time you'll ever get exactly the same trades. And I can guarantee you, your VPS will go down at some point when his doesn't, and you will have different trades, and the new timeline starts. There has to be discretion coming back in now as to what to do next. You never get the same P&L though. Yeah. Someone's just come in, bought the position trader EA, messaged me last week saying this thing is absolutely amazing. I'm trading ADR reversals with it. I've made 6%. I've got other people in there going, holy crap, I'm in 20% of drawdown on the US dollar CAD. They're doing the same thing. Same EA, same strategy. He's just made 6%. He's in 20% of drawdown on one trade. Why? They started at different times. So you've got different decision-making processes to make. Yeah. Oh, look at that amazing setup on Euro Pound this morning. You get an ADR reversal. Did you take that short? No, I can't, because I've got so much drawdown on the US dollar CAD. I can't take another trade. Someone right now is trading this and is going to make 1% out of it today. So could you, but you didn't, because that different. Yeah. This is the bit that I've struggled to get across in the bootcamp. When I go through drawdown control, and I can explain that it's a portfolio approach to trading, but I can't explain what to do at any point, because everybody needs something different as well. If you're happy to bank $100 there, bank it. I'm not, but if you are, do it. And then your trades moving forward are not going to be the same as mine. My portfolio is going to be different. When I take trades is different. It's just different. You are the edge. And this is where you need, and I keep saying, oh, this is something we're going to do a session on in the members group, in one of the members session. And I spoke about this before, is we're going to go in and we're going to use the EA in the back tester to basically trade. And we're just literally going to go into the visual mode and we're going to take trades. And this is something that you have to do to learn to trade. You have to trade. There is no theory course that can teach you how to trade. There's theory course that can teach you theory. I have read every book under the sun on trading. I have more knowledge than most people on trading because I've been doing it a long time and I've read every book there is. That does not make me a good trader. It makes me incredibly knowledgeable. Yeah. But when you are sitting in here and this thing is going like that and you press the button to go long, that has nothing to do with making money, does it? It makes me go, I've seen a double bottom formation here, and I think it's probably going to bounce. And the other thing that's going for this is a whack and great propulsion gap they're going to head for. So I'll go long on it. Yeah. Oh, I've got a TP set. It's just closed it out in profit. But I would have let that run up into here. Now I've got to add because they're going to move up into here. Yeah, but the only reason I'm saying this is what's going to happen next is because I've been doing this for 17 years and I've seen this happen for 17 years. It's burnt into the back of my retinas. What's going to happen happens over and over and over again. That's my edge. If you come into trading for 3 months or 6 months or a year or 2 years, you've done 5 courses, 2 courses, 10 courses, blown 1 account, blown 2 accounts, never gone live and only on demo, your edge is different because your experience is different. Knowledge, you can be an expert, knowledgeable, but doing is totally different, and you learn by doing. There you go, there's a propulsion gap fill. Yeah, I was going to get out here, that didn't play out, so I took a second one and got out here. I couldn't do it because I got a TP set, but that's what I would have done. And I identified this would get filled because it always gets filled. Because it just does. This is what happens over and again. And if it doesn't get filled, the next one will. And if it doesn't get filled, the next one will. Doesn't matter which one does. What you do is you adjust your price so that when one of them happens, you make your profit. Not getting in, getting out. But you have to do it. You have to see it over and over and over again. Let me just turn TPs off. And this is something we will do in one of the member streams. And this is what you should be doing. And what I was told to do by one of my mentors was, he said, go in the back tester and just watch price go past. Yeah. So if you here now do that, what you've just seen is a month of price action. Obviously, you don't want to do it that fast. Let's move it down to there. Yeah, you're seeing months and weeks and days of what the market does over and over again, flying past your head. Yeah. So when you see things happening, you expect them to happen over and again, but you've got to see them happen in real time. In the back tester, it doesn't make any sense. Mr. Trader, I'll take one manually because it looks like I wanted to get in there, but it didn't. Yeah, I know. But, probably going to head to there. But you've got to do this. You've got to see this in real time. And the only way you can do this when you're trading is by doing it. And the problem with doing it is if you're trading a 1 hour chart or a 15-minute chart, to get this kind of experience under your belt is going to take you 3 or 6 months or 12 months in real time. Most traders, I was told when I started trading, the average time to getting to break-even point is 3 to 5 years. I said that's a load of rubbish because everybody else is doing it. 5 years later, I'm sitting there, I'm not profitable. And I'm going, why am I not profitable? Everybody's told me that they can do it. They've all got Lamborghinis. Everybody told me this works. Because I haven't got the experience. As soon as I got the experience, I was like, that strategy is rubbish. It looks the same as the other one. That strategy is rubbish. It looks the same as the other one. That's not going to work because he doesn't understand why this does this. Because I've built up knowledge. And your knowledge turns into a system. And eventually your system turns into, it's random. And when you understand and embrace the fact that the market is random, you know that you can't have a system or strategy that works all the time because you can't apply structure to randomness. In any walk of life, you can't control the weather. You can't control the sea. You can't control a binary price action movement up or down on a daily basis. When you embrace that, you know that the only way you can make money is to press a button and wait. And then if the outcome is profitable, take the money. But the money that you take is discretionary. If the outcome is not profitable, wait. If it's still not profitable, wait. And if you still don't like it, add another one. Change the trade to be in a different place and wait and then see what happens next, because this thing isn't going to do what you want it to do and you can't force it to do what you want it to do. It's going to do what it wants to do, and if you want to make money, you need to wait for it to become profitable. not try and find something to apply to something to be profitable. It's just a different thing. Yen's moving. Okay, so what's the P&L? Okay, 60. But does it matter how much money it is? Yeah, everyone's trying to make tons and tons of money. What people should be focusing on is not losing their money, because if you lose your money, you're out of business. Yeah, the best way not to lose your money is not to place an order that loses your money. If you do this over and over again in here, you will realize that what happens is it goes up and down. And by pressing buttons and realizing that you probably won't press the button more than 3 or 4 times before you press the close button, you will realize that that's all it does. It goes up and down, and your job is waiting. That's all you got to do. And that's all this EA does. The position trader EA just goes, let's try here. But we're trying when the market is extended. Yeah, elastic band theory taught in the bootcamp. When it's extended, it's gone beyond its average daily range, or its relative strength has been strong for X number of days on the trot, meaning that we get a reading on an RSI above a level or below a level. Let's try and press the button there, because we know that it goes up and then it comes down. So if we wait until it's gone up, it will probably come down. If it doesn't come down, we'll wait until it does. It will do. But eventually you're going to get, you will convince yourself, if you do it in here, that that is all that's going to happen. I have no idea what's going here. Let's try a short at the highs. Days going past. There we go. Short at the highs worked. If it hadn't worked, it would have gone up. Don't take a loss. Pointless. Anyway, I'm doing the members stream that I was going to do now. So let's try a short up there. Wait. $97. What's it done? Same as it always does. 61.8 retracement. Where's it going to go next? I don't care. Same thing over and over and over again. Fibonacci is the best thing on the planet, honestly. But you can't formulate a strategy around it, because all Fibonacci does is measure price. You don't know which one it's going to go to. And the problem with Fibonacci is, and this is the thing actually about Fibonacci that people don't understand. What's the one thing you do not want to buy when you're looking and shopping around for indicators? A repainting indicator. They're the worst thing since sliced bread. I know, I'm going to use Fibonacci because I don't like these repainting indicators. It's the biggest repainting indicator on the planet. Look at this. Move down. I'm going to go for a 38 to 60 retracement on it. It didn't. Oh, okay. I'll move it down to there because we made a new low. Oh, it didn't. I'll move it down to there. Made a new low. Oh, it didn't. I'll move it down to there. You've just repainted the Fibonacci indicator 4 times. I'll move it down to there. Look, there you go. See, I've got a beautiful pullback. No, you didn't. You got 4 losing trades and 1 winner, which probably just about covered the 4 losing trades you've made. You're actually break even or a losing trader because you're using a repainting indicator. Just don't realize these things until you sit and watch the market play out hours and hours and hours in the strategy tester. You see the same thing. So go and do it. If you haven't got the position trader EA, go and download the demo from the marketplace. And just use it in the strategy tester as a tool to teach yourself what the market does. And then if you like what it does, you can program it to do what you want it to do. But what you want it to do is not going to be the same as Wayne or I or anyone else. It's going to be what you want it to do because of what you see. But it all works. And then sometimes it doesn't. And that's where you make your money. Yeah. This strategy that we've got running, which is one of the ones we're looking at in the members group. I was saying about this strategy the other day. Yeah. I've no idea about all this profit it's making because I don't see it. The only thing I'm looking at is this, because this is just happening and working because the strategy knows that this happens on a regular basis. So all these TPs, you can't see them, but there's an absolute shed load of TPs. TP after TP after TP. It just makes money constantly. Look, it's just all it does is make money. It's brilliant. Lovely strategy. But as a trader, this has absolutely no interest to me whatsoever. It doesn't come onto my radar because this is just going to happen every day. What I need to do, and where my skill comes in and my edge, as Wayne's said, is my skill comes in going, right, let's have a look at where we're going wrong. Let's deal with this. While this is printing money, let's figure out a way out of this. That's where the skill in trading comes, not the skill in finding a strategy. It's the skill in dealing with the strategies and the trades that don't pan out. Eliminating your losses. This video is there because that's how I eliminate my losses. I identified where my losses were and I stopped doing it. Profitable, because I don't lose money on gold anymore. Yeah. Sorry, I'm waffling today. Or not waffle, it's a Monday. There's nothing to do today. We know which direction to trade. Go against retail traders. Yeah, you can do that. Again, you can do that, but when I've tested that. Yeah, I've built an EA which automatically trades against retail. Doesn't work. It doesn't work. Why doesn't it work? Because retail are right sometimes. Yeah, if you look at a retail, I built, this is the thing. I've built an EA to test everything. No one can throw a strategy at me and go, hey, I found this. And me not go, yeah, I know. I've been around too long. And I've been doing this 8 hours a day for a decade and a bit. And I just have seen it all. And every time someone comes to me with something, I've seen it in another shape or form. And this is kind of why I think these members streams are so good, because I'm just, every now and again, we're going to find a strategy that's great and it will roll out like the one that Phil's found. But what Phil's found is a strategy and turned it into a position trading strategy, and it works. Why? Because it's a position trading strategy. That's it. So it's taking a random entry, which is retail, for example, in what Travels just said. Go against retail. Okay, so retail are short, so I'll press the long button. It goes down. I'm wrong. What do I do next? That's where the money's made. Not the fact that retail got it right and you press the wrong button. It's what happens next. Because retail changed their mind. This is why retail, going against retail doesn't work. So the EA I built was trading against retail. So if retail are long, I would press the short button. Then if retail were right, I would stop out. That's it. If retail were wrong, I would make money. It's still a binary option. Retail have become your signal indicator. So why not just use something more reliable like a market structure indicator, which tells you when someone's in charge of the market? Again, this thing doesn't work half the time. This thing doesn't work half the time. Propulsion gaps will either get blown through or they won't. But every single thing you put on your chart is binary, because this only does that. And as soon as people understand that and accept that, they suddenly become profitable. They suddenly become break even. They stop trying. And the reason they become profitable and the reason they become break even is because they stop trying to find the Holy Grail. It's almost like a game. You go to Forex Factory, you go into Forex Factory and you go into the forums and you go into the trading systems and you look at the 3,500 trading systems and you go through them one by one in reply order because they're the most popular. And it's not until you realize that none of them work that you suddenly start to become break even. Because every single one of these, if you go into this one now and search for a trade, and then go into that one and search for a trade, and go into that one and search for a trade, and go into that one and search for a trade. Go and find a Euro US dollar trade in every single one of these. Yeah. And see how many of them go long and how many of them go short on the Euro US dollar. You'll probably find it's around about 50% of them have gone long and 50% of them have gone short. Why? Because there isn't anything else to do. It's binary. It goes up and down. So just press a button. Literally press a button and wait. Same thing. But do it in a little bit more of a logical way, but just don't concentrate on trying to find, this is partly why I've taken that retail sentiment down off of my website, because people were getting obsessed with it. My God, I went long against retail and it worked. And then you don't hear from them and it's like, how's it going? Yeah, not been so good this week. Why is that? Because it sometimes goes up and down. That's it. It's bizarre. But that is all it does. Morning, Harold. Franco, everyone needs, everyone's level of pain is different. Yeah. Even the pain of winning makes you crazy. Yeah. But this is, you know, this is why I have this document on the website. And this is the steps that you go through. You'll only know you're going through these steps after a while when you basically are. Let me just open that, and I wanted to open that image. There we go. The only reason you go through these steps, the only reason I've put this up there is because you've got to go through these steps to identify the steps. Yeah, everybody starts here. Like, what's forex? What's a limit order? What's a stop order? What's a stop loss? How much should I risk? How do you calculate lots? What's a swap? Yeah, idiot. Everybody starts as an idiot. There's no one that comes into this that knows it. Yeah. Then you realize you're an idiot because you see the overwhelming amount of ways to do this, and you go, I'm going to press the button and I know this is probably not going to work, and you get cross and you beat yourself up. Then this moment here is the part that most people become break even. Around about 3 to 5 years, you suddenly go, it doesn't work, because you've spent 3 to 5 years system hopping to realize how stupid you are. Yeah. But some people never get past this point. And this is the, I think with most people, this is somewhere in the region of the 2 to 4 year mark, maybe 2 to 3 years. You try it for a few years, and you quite often you'll do it and you jump out and you go and do something else, and then you'll see an ad and you'll go, oh yeah, I did have some success with that, and you'll come back in, and that part you never get past. You never get to this part, and this is literally the part where you suddenly realize that this thing just does that, and then you go, holy crap, and you become break even because you stop system hopping. And this is the stopping system hopping. It's either sticking to one system and understanding that if you apply risk reward properly and it's got a higher than 50% strike rate, you will, but it's going to do that all the time, and you accept the fact that you're going to lose loads, accepting losses. Yeah. Or you realize that you can position trade in the market, and when you get it wrong, you just move your price. Again, they're both the same. You either accept a load of losses, nothing wrong with it. There's a lot of good traders out there that accept a load of losses. I am of the other ilk where I can't accept losses because my psychology doesn't like it. So I change the way that I trade, and I trade in the way that the banks trade. Banks just dollar cost average everything. Yeah, they get into a position and they trade that position. Then you get to that stage where you double your risk because you've got it cracked, and then the market kicks you in the arse with US dollar CAD and you go back to step one. The next time you go, I'm not going to increase my lot size because the last squeeze nearly killed me. And then you're there. But you have to get kicked. You have to try everything, because you won't get this without that. You don't get here without being an idiot, and you don't get walking on water without cracking it. And when you crack it and the market kicks you, that is the last time you get kicked by the market. Yeah. US dollar CAD, I got out with a 9% loss. Why did I take a 9% loss on that trade? Because it's done it to me before. And I know that if I get out now, I get out with 9%. If I don't get out now and it goes against me, it's going to hurt more. I'm not walking on water. That's my autopilot kicking in. But it's only kicking in because I've been through multiple squeezes. The first squeeze you get to is probably going to hurt. But you can't do it. You've got to do this. This the only way you can do it, as far as I know. And the only reason I say this is because I was told all of this and I ignored all of this. And I'm sitting on the other side now from the guy that told me all of this, and he was sitting there having gone through all of this, telling me that this is going to happen to me. And it's going to happen to everybody. There's multiple blown accounts in my steps, but I haven't blown an account for well over, I don't know how many years, many years, because I've got past the walking on water bit. This is the bit that kills you. It doesn't kill you. It hurts you. if you're lucky. But this is blowing accounts. This is blowing accounts. This is break even. This is either taking a massive loss or blowing an account because you didn't do what the break even thing did, or you've identified where the problems are. Yeah. Again, this eureka moment for you could be, I've been on Bulls of Wall Street doing stock trading. I can't do it. I've done Warrior Trading's course on stock trading pink sheets. I can't do it. I've done ICT, where I'm trading on the 5-minute chart, and I'm tried every variation of ICT that everybody's ever come up with, and I can't make it work. Funny that. And that doesn't work for me. So I've tried investment level trading on daily time frames. That I made money at, but it didn't make enough money to make me money. So I'm going to go back to ICT and revisit that and try and apply some of those concepts to the daily time frame. That doesn't work. Yeah. You'll get to the point where you suddenly realize none of it works because of one simple fact. It's got an order in it that loses money, and you can't handle loss. You either can or you can't. If you're in that camp, use a stop loss. If you're not in that camp, position trade. That's it. But if you carry on system hopping, what you will do is you will stay here forever. You will never get out. It took me years and years. And a guy dragged me out. Yeah. Strat at Forex Factory dragged me out. He said, right, stop right now. Go and read this. Come back to me in 6 weeks. Do not do anything for 6 weeks. Then read everything I give you. And then come back and spend 3 months with me. And I will have you in a private group. You'll be with me, no one else in this group. Well, there was 5 of us in this group, kind of the turtles. And we will just do what works. And every time you tell me something, I will tell you why it doesn't work. And if you don't listen to me, you can piss off. Yeah, that was my eureka moment. But it took somebody to basically punch me in the face and tell me to stop system hopping. That's it. That's all you're doing, isn't it? Let's look at a YouTube video. Let's go to my channel. Have I got anything? Oh, Greg Secker. Couldn't make it up. Right? Greg Secker's T-Wave Masterclass. Is she a trader? No. Is she a model? Probably. Does Greg Secker even know her? Probably not. Yeah? You'll get on this and you'll go, wow, she looks good. I'm going to trade the T-Wave Masterclass. There you go. You give Greg Secker some money. You'll stick with him for 3 months. Yeah? And that won't work. And then all of a sudden, she'll come back with a different thing that Greg Secker's offering to do with artificial intelligence, and you'll jump back in there again. He'll take another 3 months of your life and your money, and that's 6 months of your career gone. Now you've learned 2 strategies that don't work. So then Kunal Desai or someone else will jump. No, Kunal's really good. Not Kunal. What's the other guy? I don't know, there's loads of them. Someone else will pop up on an advert, basically, and you'll go and do that. And this is what you do. You run around following these people. Yeah. You go to this guy who will give you a free something or other, yeah, and promise you to make this in front of his mansion, which is all paid for by education, not trading. Education pays for it all, yeah. It looks like a removal website. A squeeze page, which sells you all your dreams. And he's going to give it to you for free. But he's not. Because you're just going to go back to here after it. But you'll go back there 2.5, 3 grand, 5 grand lighter. Whatever you've paid him, you'll go back that much lighter. Same with prop. Prop's the same thing, isn't it? Everybody's doing prop and paying the prop firms. There's a prop firm out there at the moment that's saying, ditch the broker, trade prop. So if you were going to put 3 grand into the broker to try and learn to trade with and don't do that. Give us your 3 grand and we will give you the promise of a larger account that you can trade with. But all that you're doing is parting with 3 grand. You're not going to make any money because you're stuck in the cycle. Prop is just another course. All the prop firms sell courses. Yeah. Top Step, who I'm with at the moment, they've got a TV channel, for God's sake. What are they doing there? keeping you watching telly. Admittedly, these guys are professional traders. They are ex-pit traders. Yeah. But I was watching Friday's stream. They lost thousands, lost tons, loads. Got it wrong every time. They just got it completely wrong all day long. All of it, all day long. Yeah. But they'll get it right today. But if you tot up the amount of money they make over the entire month, I'm not sure it'll come out as a positive. Anyway. Stuck on step 2. You're in here, travel. That would change fast. Yeah, exactly. But this is the thing. This is the thing. You know, if you identify this, you're there. But your decision now is system hop or do. The best way to do is to press buy today, flip a coin, press buy, and wait. Yeah, that will become your eureka moment. Yeah. If you stop looking for the Holy Grail, you're in the members groups. Yeah. We've been through in the members groups, in the members sessions, all of this content when we're looking at the strategy development robustness testing. Yeah. All these videos on identifying levels and all this sort of thing. None of this is a strategy. Have I given you any strategies at all? No. This is all how the market moves. If you understand how the market moves, you should be able to look at any strategy and go, that's a mean reversion strategy. That's a trend strategy. That's a breakout strategy. He's using the wrong risk reward for that, because risk reward shouldn't be that on a trend strategy. It should be this. So that's useless. What it allows you to do, all this information that I've given out at the beginning of all these members streams, is identify there's only 3 types of indicators, 3 types of strategies, and 2 directions that price goes in. If you understand that and you hop off to another system, there's nothing you can do. You're not going to make it, because every system that somebody gives you, you can identify and say, that is the same as this. A Bollinger Band mean reversion strategy is the same as a stochastics mean reversion strategy, which is the same as an RSI mean reversion strategy, which is basically an extension of price that we're looking to hit the sell button on. All that you're doing is by using a Bollinger, you're getting in there. By using an RSI, you're getting in there. But use stochastic will get you in there. The CCI will get you in there. The MACD will get you in there. But basically, every single one of those 5 strategies I've just made up out of thin air is a mean reversion. There's one strategy called mean reversion. There's one strategy called breakout. There's one strategy called trend. Every single thing falls into those 3. If you know that and you're still system hopping, there's nothing anyone can do for you. Because if I give you a new strategy today and say, here, I've got these 3 moving average strategy. You've probably used a single before, but this one uses 3. You should immediately go, it's a trend strategy. Yeah, but it uses 3 moving averages. So what do you do? Press the buy button. Yeah, all right. You're conscious about this. That's it. You've done it. You've cracked it. So you know that basically if you want to be a trend trader, you wait for a pullback after it's gone higher. But how you get out is the important thing. And if you use a stop loss, you will continuously get killed. Because that's all they do, move it up and down. And if you press the buy button and it moves down, you're just going to lose money all the time. And as you can't control that, but if you know about it, that's your eureka moment, isn't it? So how do you trade? Take a tiny little risk, press a button and wait. Easy. Many systems work. Problem is most traders are inexperienced and lacking in trading exposure, time in the trenches. Yeah. There's a lot of systems that work, like I say, but you know, I've got 2 strategies now. The position trading strategy, I've got 2 strategies for mean reversion. You can take an ADR reversal here today, or you could take an RSI extension here today. It's mean reversion. What I do is give you 2 variations of it. If you took there's not really a good signal there today, but it's an ADR hit, market's moved up, so short it. RSI's moved up, so short it. It's a mean reversion strategy. It's an ADR strategy, it's the RSI strategy. But if it doesn't go down, it's a position trade. Yeah. The strategy works a lot of the time, but a lot of the time it doesn't. There's an ADR hit there. worked beautifully. But if you took a short here and you put a stop there, the mean reversion trade didn't work. If you didn't put the stop there, the mean reversion trade did work. Why did that? What was the deciding factor in working and not working? Not that. It wasn't because ADR was hit. It was because of your orders that you placed after ADR was hit. That's the eureka moment that everybody needs to get. Doesn't matter how that's pressed. Yeah, it's how you deal with it. Oh, I got a reversal. I'm going to go long. Brilliant. So it pushes up, you move to break even, it comes down, takes out your break even and pushes up to your target. Did you make money out of that trade? It wasn't because of the reversal alert. It was because the fact you moved to break even. It's what you did after the trade that broke you even or hit your target. If you'd have got in on the reversal alert, retest, put your stop under the low with a 1.5 R ratio, you made money. If you got in on the reversal alert, it pushed up, you broke even to protect your capital and got stopped out, and then it pushed the target, you didn't. Both traded the same thing. One winner, one loser. Why? Because of the after the button press, not because of the button press. Yeah, that's the eureka moment. That's the bit that people need to get. Stop focusing on getting in. Focus on getting out. But to focus on getting out, because it's random, you cannot get in with 1% of your account and cross your fingers and hope. You get in with a tiny amount of your account and add to it if you want to. Somebody at the moment has contacted me as well, not a member, somebody else, and he's explained what he's doing and how he's doing it. And he's asked me for an amendment to the EA so that he can test it. And it's basically adding to winners, which is what the opening range breakout EA does. We've got an add to winners functionality. So the idea being is, actually this is with the market reversal alerts, not the position trader EA. So it takes a reversal alert. When we get the retest arrow, he wants to add size on the retest arrow because we're working. And then for the actual trade to play out, the distance needs to be half of what a normal risk reward does. Absolutely fine way to trade. The trouble is, if it doesn't work out and it goes the other way, you've got double the risk on, which is why I'm hesitant to do it. But there's a million ways to amend your trade once you're into it. And what he's doing is he's adding half and then adding half. And then you get the option to take half as well and hold and turn it into a trend. There's a million ways to do it, isn't there? But that is the original starting point. But the way that he's making money and why he's making money isn't because of this. It's because of what he's doing after by adding more size. Aussie New Zealand's 125 today. Again, not really an extension. It's a spread. Look at this. So brokers, why is this candle here, everybody? Everybody that went long from Wednesday last week has what? A stop. Where? There. Brokers stolen the money and off we go. Yeah. Why is everybody today phoning their broker and moaning about that? Because they used to stop loss. I love it. Brokers. God, if I had £250,000, I'd just start up as a brokerage tomorrow. It'd be amazing. Best job in the world. You don't actually need like about 2 million quid to set up as a broker, but great job. Easy money, isn't it? Take the money and run. Every time. Right, I'll leave it there today. Let me just quickly look at the indices and see where we are. Pretty hideous today. So long on the FTSE still. Just it's not going anywhere. So there's just no movement at all today. We are stuck fast. And DAX, we've had 1.5 hour movement to the downside, and that's it on the pre-market range. So yeah, it's just dead today. Nothing we can do with any of this really. So either that is going to break, in which case that pays for that, or it's not. It's going to hedge and it's going to be a double whammy today. Right, I'll be back tomorrow with members stream. So tomorrow morning at the same time, we'll be doing the members stream. Yeah, we'll be either looking at the support resistance bounce or going through sort of the index setups that I'm looking to get for the new EA that I want to build and test. So I will see if I can today have a look at that video that someone's put up from that guy, the coding bloke. But it looks to me like that can all be done with the ORB EA anyway. So I'll have a read through, or watch through that video. How long is it? 13 minutes. Oh, that's all right. I can watch that. So I'll watch that video. And maybe we'll do some testing on that as well. But tomorrow's going to be a very sort of, we'll do stuff tomorrow, but nothing specific planned. So anything you want to cover in the member stream specific, obviously let me know and I'll make sure I cover it. But other than that, we're just going to whiz through plans basically, and we will keep looking at the lazy trader strategy, which is working really well. We'll do some updates on that. So, but at the moment, I don't want to touch it because it's just printing money. Fingers crossed. All right, so have a good day. Anything you need, let me know. I'll be in Discord. Other than that, I'll be back on Wednesday afternoon is the next normal stream for the NAS and the Dow. And obviously, just bear in mind what's going on with news tomorrow as well. So for the CAD. All right, have a good one, and I will see you next time.